Good morning, good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for November 2nd, 2008. AccendoTraders.com, effective trade plans delivered daily. Each time we get together, we go through our routine, our trade plan to prepare us for the next trading day. However, on the weekend, we add things by looking at some of the blogs and newsletters of some of the experts. We want to check the sectors to see if we have any trending going on here that we need to look for. We scan for new trades. We do that every night. We set alerts for new trades, but most importantly, we always want to make sure we have time for our families. And a trade plan cuts down on our time each night so that we can do just that. So, last week, we had the market end up for the week, finally pairing some of the losses that we've had for the month of October. And speaking for the month of October, it certainly will go down in the history books as one of the most volatile months in history. October has been known for producing some of the most unsettling moments in the stock market history, and definitely this October was no different. Basically, there was a stock market crash in October on the S&P 500 between that October 3rd and the October 10th time frame. The stock market did drop about 27%, but it did fight back at the end of the month, so that it was almost only down about 17% for the month. So that final week of trading, the S&P gained a little over 10% during that last week. What was interesting is that during that last week of trading, we did still have some negative news come out, some negative economic news come out with consumer confidence and the GDP declining. But the market kind of shrugged it off, or more importantly, it already priced in a lot of this negative news, and the market did end up. So the market did go up on a week of some bad economic news. And you can see that Friday's session provided the first back-to-back up days, meaning Thursday and Friday were both up days since the end of September, I think the 25th and the 26th. Again, as we already said, October was a month of full extreme volatility. We reached up into the 80s on the VIX. We've dropped down to the 50s. Remember, 30s used to be something to be scared about, let alone 80. But yeah, the market was very volatile, especially at the end of the trading. We had days where we were up, but that final hour of trading, we would just fall down. But again, we had our first back-to-back up days, so we did fight off those end-of-day selling. And the FOMC voted unanimously to drop the Fed's fund rate 50 basis points to 1%. And they actually left the door open for more cuts. And the funds rate has not been below 1% since 1958. So that certainly is interesting. This week we got construction spending, auto trucks, ADP employment, which is a precursor to Friday's non-farm payroll numbers. So Friday's probably going to be the biggest economic news as far as data. So coming in tomorrow, construction spending, IM says, not much going on there. We do have dry shipping earnings before the market and MasterCard after the market. We noticed I didn't really talk too much about the corporate headline news. We did have, I believe it was ExxonMobil break records again with their earning profits. And you can see this week we got UPL, RIG, GDP, and other oil companies producing earnings this week. So that certainly will be interesting to see how they do when the oil has dropped so much. I got an email from a friend of mine that he saw oil, gas under $2. And I actually, what's funny about that, if I digress for a quick second, is that I joked with a friend of mine that if I ever saw gas under $2, I'd probably have a heart attack, because I was reading an article about a gentleman who bowled a perfect 300 and had a heart attack and passed away. And that's not funny, but I might do the same if I see below $2 gas. Okay, let's move on to the sectors. Okay, as we look at sectors, we can see that we have potential, double bottom here. The October lows are holding. But you can see the important thing is where we're at. We're at the 20 moving average. So we are at a crucial point here of where we're either going to fall. And notice that when we hit the 20, we made a new low. Before it was the 50 moving average, and as we hit the 50, we made a new low. Hit the 50, made a new low. The 20, a new low. So if we don't move higher, we're going to make new lows here. Here's the energy sector just above the 20. But as we get through here, you're going to see several, like our metals that are below. These are the only ones that are concern me. The metals here, steel, gold, they're all below the 20 and actually had sort of a down day on Friday. But as we continue to move down here into our finance, you can see we're strong into the 20. Look at drugs above the 20. Check out railroads above the 20. So we have some nice moves here, actually up at the 50. Electronics, internet, we have some great stocks, sectors here. Look at casinos. What we're looking at to see either the sectors in the market to continue to move forward and run up to the 50, or we're going to fall and make new lows. Okay, and now we're going to go to the education portion of our video. We are using the book Trading in the Zone by Mark Douglas, and we are on Chapter 3, Taking Responsibility. Winners, Losers, and Busters is the section of Chapter 3 where we're at. And last time we talked about the 3 types of traders. Basically, he's saying there's a small percentage of traders that are consistent winners. There is another percentage of traders, about half of them, that are boom and bust. They win some, they lose a lot. And then there's also a large pool that always lose. And so what Mark goes on to say is that the hardest concept for traders to learn is that the market doesn't create your attitude or state of mind. It's just a mirror of your attitudes. And, this has been a consistent theme that the market doesn't care who you are. And the market just goes on with or without you. Whether you're trading or not, there's still a stock market. And whether you're winning or losing, there's still a stock market. So the market does not have a vendetta against you. The market is not trying to take your money away. The market is just a stream of data. And so when you're confident, and more importantly, when you have your rules in place and you're trading your system, you're not trading your emotions, then the market just interacts with you based upon your rules. And sometimes it works and sometimes it doesn't. But the market continues to move on. But when you're trading off your emotions and when things go against you, that's when the market feels like it's out to get you. That's when the market feels like there's a vendetta against you because you're trading off your emotions, not off of rules. So ultimately, the worst thing you can do is not to take responsibility for your trading because it puts you in a cycle of dissatisfaction, a cycle of pain. When you don't take responsibility for your trading and you lose, you blame that guru that you're following. You blame that newsletter. You blame CNBC. You blame the CEOs. When you really need to do is to blame your system, or more importantly, your lack of no system. I'm continually amazed at how many times I ask a person, why did you get in that stock? And they don't know. They just talk about this newsletter. They don't talk about their risk reward target. They don't talk about, well, I got in because I believe, according to my system, it's going to go here. And I have my stop here to protect me as my risk management, capital management system. I don't hear that. I hear, I don't know. I just got in. I heard that this stock was going up. I mean, and usually 9 times out of 10, it's these counter trend plays that make no sense. The market's in a downtrend, and you're trying to buy a call or go long in a stock. So again, you put yourself in a cycle of losing when you don't have a trade plan, you don't have a trading system, you don't have a concise method of trading based upon rules and conditions, and you continue to trade based on your emotions. And then, to finish off, Mark goes on to say that some people think, well, heck, all I got to do is learn more about the market. And learning about the market is good. We all should be lifelong learners. However, when you're learning more about the market and you don't have a system in place, then you're learning for the wrong reasons, and you'll apply what you learn in the wrong ways. You won't see what you need to see because you have blocked it out. You're your vision has been blocked by your pain and you don't see that you need to get out, you see every tick by tick and you get into that battle. Nothing's more important, and we all know that is the Accendo trader's way, than having a trade plan. To get the full version of our podcast, you can download it there, saccharipodcast.html. If you're ready to step up and become a full member of our daily podcast, our daily videos, there's our link, accendotraders.com, video.html. Every night we put out a video to help you prepare for your trading day. Come check out our blog. Our full version of our free version gets there also. And don't forget about our 30-day challenge. We had a great review session yesterday on technical analysis. This week we're heading into chart patterns. Thanks, guys, and I will see